Welcome to Module 3, Financial Management for Creative Entrepreneurs. This first lesson is about the essentials, understanding how money actually flows through creative work. Good financial habits don't limit your creativity, they sustain it. Let's begin. Let's start with a paradox many creative people know well. You may love your creative work, yet still find money stressful to manage. That is completely normal. Usually it comes down to a few things. It's unclear what's coming in and going out. Income is irregular, and payments arrive late. Feast and famine makes planning feel impossible. And personal money mixes with business money, so your real profit is hidden. Here's the good news. Every one of these is fixable, and it starts with a single idea: awareness. You cannot manage what you cannot see. So this whole lesson is about learning to see clearly. Before we go further, one distinction changes everything. Profit is not the same as cash. Profit is what's left after costs over a period. Cash is what's actually in your account right now. Cash flow is about timing, not just totals. You can be profitable on paper, a big invoice sent, and still be unable to pay rent this week because the money hasn't arrived. So we watch both, the profit and the timing of the cash. Money moves through your business in a loop. Let's follow it around. It starts with income, every euro that comes in. Commissions, sales, teaching, licensing. Then costs, what you spend to operate. Materials, rent, software, taxes. What's left is your margin, your profit, and your room to breathe. Cash flow is the timing of all of it when the money moves, not just how much. And all of that feeds decisions, what the numbers tell you to do next. Those decisions shape your next round of income, and the loop begins again. Most financial stress comes from only seeing one part of this loop, usually the income, and the panic when it dips. But when you can see the whole circle, you stop reacting and start steering. The goal is simply visibility and balance. See the loop, and you can steer it. Now the single most powerful habit in creative finance. Separate business money from personal money. You don't need a company to do this. A second, free bank account is enough. Why does it matter so much? First, it avoids confusion and tax headaches. No more untangling which coffee was a client meeting and which was just Tuesday. Second, it makes your real profit visible. You finally see what the business truly earns and spends. And third, it helps you look and feel professional. Clean records make tax time, grants, and loans far easier. This one distinction also protects your personal assets and gives you an accurate picture of your creative work. You don't need anything fancy. A second free current account, used only for business, is enough to begin. Here's a simple rule to live by. Your business is your client. You pay yourself from it, deliberately, not by accident. So how do you deal with those challenges we listed? With small, regular habits. Here's the mindset. Good financial habits don't limit your creativity. They sustain it. They are what let you keep creating. The trick is to make them tiny and regular. A small weekly check-in always beats one panicked catch-up at tax time. First, pick a time and stick to it. 10 minutes every Friday, say. A routine you actually keep beats an ambition you don't. Second, record your income and expenses. Every euro in, every euro out, including the small purchases that quietly add up. Third, keep one tidy digital folder. Finances 2026 with subfolders. Invoices, expenses, bank, taxes, tracker. And write your commitment down in your own words. I will dedicate 10 minutes every Friday to update my finances. Naming it is what turns a good intention into a habit you actually keep. So how do you actually see your money? You build a money map in 3 simple moves. First, separate draw that clear line between personal and business finances. Second, track every transaction. Record all your income and expenses, even the small purchases. They add up and they affect your bottom line. Third, review your monthly patterns. Look for seasonal trends, recurring costs, and the swings in your income. You don't need complicated software. A simple sheet Excel, Google Sheets, or Notion is plenty. The only rule is that it's clear to you what you earned and what you spent. Let's make this practical your first exercise, the money map. The idea is to turn awareness into a picture. You sketch a simple flowchart of your money. Start by listing your income sources, commissions, sales, teaching. Then all your expenses, materials, rent, software, taxes. Include your savings, like an emergency fund, and any debts you're repaying. Then draw it. Use colors and arrows to show how money flows: income, expenses, savings, debt. To turn it into a real tracking system, do 2 more things. Use categories like freelance, sales, materials, or taxes. And date every movement. Categories and dates are what turn a sketch into a system you can actually learn from. You don't need to track everything perfectly on day 1. Start with 3 income sources and 3 expenses you already know. The point isn't accounting grade precision. It's building the habit of looking so the numbers become familiar, not frightening. Here's why all this tracking matters. It's not about being tidy for its own sake. Once you can see your money clearly, the numbers stop being scary and start pointing somewhere. You can finally set real financial goals, grounded in your actual data. Set a revenue target. A clear monthly number to aim for turns vague hope into a concrete plan. Reduce your fixed costs. Every euro of fixed cost you cut lowers the pressure on every single month. And increase your margin. Small gains in price or efficiency compound over time into real breathing room. Remember the principle. Awareness is the start. Direction is the point. Tracking is only truly useful when it changes a decision you make. Let's see a real month with real numbers. Income, 600 from freelance, 100 from prints, 150 from a workshop, 850 in. Expenses, rent, transport, software, and materials about 475 out. Savings, 30 euros into the emergency fund. And debt, 250 on a credit card, 200 on a bank loan, 450 repaid. Notice this. Income is well above expenses, so on paper it looks healthy. But once you add the debt repayment, cash gets tight. That's the timing lesson. Happening live profit is not cash. Let's end this lesson with the idea it all rests on. You cannot manage what you cannot see. Every technique in this whole module, budgeting, pricing, invoicing, builds on this one foundation of visibility. When your money is a fog, every decision is a guess, and every quiet month feels like a threat. But when you can see it clearly, the flow, the map, The numbers, you stop reacting and you start steering. So get the seeing right first. Everything else gets easier from there. That's lesson 1. You've learned to see your money's separate accounts, a simple tracker, and a money map. Next lesson, we plan ahead. Budgeting, cash flow, and runway. This project is funded by the European Union. Thank you for watching.